What's up you guys, Tomy Shaw here, and today's channel what I'll be doing is trying to explain why are central banks lowering interest rates right now. Okay, so essentially what the central banks are trying to do is keep inflation low. Okay, but there's two types of inflation. There's inflation that you consume and there's asset inflation. Okay, so first of all, what are they trying to do? They're trying to stabilize, in this case, they're trying to stabilize asset prices because they're falling and they want to stabilize that price. There's a couple of ways you can do this, but by lowering the cost of capital, you essentially increase the net asset value of a business, an operating business, a stock, anything that produces cash flow. So first of all, how do you calculate this NAV value? This is for valuing a business. When we're looking at, you need to look at the free cash flow is going to produce in the future. Then you need to divide that and actualize it by the weighted average cost of capital. And to calculate the weighted average cost of capital is you need to know how much investors are asking in return for the risk that they're taking inside the business, and you do a ponderation of that ratio, and then you add the cost of debt. So right now what's going to happen on Monday is that the Bank of Canada is going to decrease their rates by 500 basis points, by 50 basis points, sorry about that. And what this is going to do is that essentially it's going to cost the WACC. It's going to reduce the WACC. So when you reduce this, it also increases your free cash flow, because if you spend less on interest, you have more disposable free cash flow to grow the business. So essentially this is what they're trying to do. Okay, they're trying to increase the net asset value because they don't want stocks to fall because the economy is slowing down or anything that's going on right now. There's a lot of things that's going on, but I'm not allowed or to mention what is going on. Okay, so the second thing is when the central banks decreases the rates on the loan, it also reduces the cost on the loans. Like when it reduces your interest rate, well, it essentially gives you more money, more disposable income to spend in the economy. And on the other side, it also gives you the possibility to refinance your home. And this has like a double effect, because when your interest rates decreases over the long run, you're going to have to pay less in interest and less in capital upfront to make up for the extra interest that you're going to have to pay over the long run. So that essentially, when you refinance, that can give you more money right now to spend right now, and it's going to decrease your capital, your payments over the long run. So essentially, hopefully that makes sense. I'm trying to talk about that right now. So a lot of people don't really understand why they're lowering interest rates. Well, sometimes it's not only about borrowing, it's about understanding how a business is valued. And if you can understand that the future cash flows are actualized by what investors are asking, if investors are asking less for the risk that they're taking, well, the value of the business is going to increase. So that's it for today. Thanks you guys. Have a nice one and enjoy time with the family, 2 weeks with the family. So if you like this information, don't forget to subscribe, don't forget to hit that notification bell, and comment down below if you have anything to add. You'd like to just add some information. It's all good. So alright, have a nice one, have a good day. Thank you.